Hi, good morning everyone. Welcome to my channel. My name is Ram Dhamija and I'm a market participant. I'm an active derivatives trader, investor, and I help people build their mutual fund portfolios. So today is 15th of June and it's an interesting weekend right now because there's a lot of activity that is happening geopolitically and the news is that the geopolitical tensions are flaring up in the Middle East, and because of that, there could be a spike in the oil prices as we go along, possibly even as close as Monday morning. So, if Monday morning the oil prices spike up, then we might have a tough session going ahead. And things have been just simmering for some time geopolitically, and the kind of action that is being witnessed in the Middle East was expected. It was getting picked up from a lot of these Twitter handles which post news about that. So it was in the making for some days, and finally it has reached a point wherein it has started to impact the markets. We saw that the impact happened on Friday, wherein our markets were down, and also the US markets were down. They were not able to recover even by the end of the session, and they closed down. So the impact of geopolitics is now being felt on the markets, and I'm going to take you through how the next week might pan out and what are the implications going ahead. So let us start with the first thing, which is our Nifty 3-minute chart. This is how the opening was there on Friday. So we opened, and then the opening became the low of the day. So we opened somewhere below 24,500. In the pre-opening, it was 24,700, 470 something odd, but it opened somewhere around 24,500, and that became the low for the day. And from there, we just kind of managed to retrace back, though we could not end in the green. So Thursday we had actually closed at 24,800. So we ended up closing at 24,700. So we could not cover the entire gap which was created, this gap down that you can see over here. We were not able to cover it, but a lot of it got covered, and the market actually was showing signs of strength. And if we look at Nifty on the daily time frame, so this is the daily time frame, and this is what I had been talking about, that 25,200 becomes a critical level, and we were not able to actually cross it. So you can see we tried 1, 2, 3, 4 times, but we finally broke down. Now till where is this breakdown going to go, we will have to see, because this candle that you see over here of 23,950 to 24,000, almost 25,000, this was the ceasefire day. Now if we break below this ceasefire, then it's a big negative for us, though there is still a lot of room for us to go there, and possibly we might recover if geopolitical tension ease off. But if we break this, this was the last low, which is 23,900, then we are headed down, and we are headed big time down. So that is something that we need to be very careful about. And as you can see, in these are the candles that are getting formed. So first 2, 3 red candles, and then the gap down. So if the markets have to go down, they go down very fast. So as you can see over here, when we made the last bottom, so from March 25th to April 7th, we lost almost 3,000 points in a matter of how many trading sessions? 1, 2, 3, 4, 5, 6, 7, 8. In 8 trading sessions, we lost almost close to 2,000 plus points. Actually, if you ask me, from 23,800 to 21,700, 2,000 points we lost in 8 trading sessions. So whenever the fall happens, it's very sharp. So we will have to see whether opening Monday we actually open at 24,400, or we have another gap down. We'll have to see. 2 gap downs are usually very tough to have, but we might open somewhere around, let's say, even if we open 24,300, 400, and we head down, then as I had been maintaining, 24,200 is the next support, and if that breaks, then we are headed down big time. So that is the Nifty charts. Now let us look at how the open interest has changed. So Friday open interest, there were about 3 crore calls added versus 2.8 crore puts. So that was kind of even. But if you look at the open interest as a whole, there are huge number of calls at 25,000, almost 82 lakh calls, and the PCR is 0.71, which is bearish. So calls are about 12 crores, puts are about 8.5 crores. Now this is a bearish setup for Nifty, and 25,000 huge number of calls are added, so it won't go off easily unless of course there's a very good news, which doesn't look like right now. Right now there is lot of tension in geopolitically, so it doesn't look anything good. Now let us look at where we are in terms of our down from 52-week highs. So private banks now are 2.4% down after making highs 3 times. Mid cap is down 4%. Nifty is down -6% now. Small caps is down -7%, right? And metal is down -10. Realty is -12. Nifty next is -14. So it's not coming up. IT is -16 now, and Alpha is -18, and Momentum is -20, almost -20. So these are the sectors on which how much they are down from the 52-week highs. Now let us come to the important part, which is the geopolitics and how the international cues are stacked up. So I will take you through the international cues. Now if you see, this is the international cues, and yeah, so what happened on Friday was that the US markets, as you can see over here, NASDAQ 100, they closed in the negative, so -1.29% down, and the S&P VIX shot up by 15%, so it's about 20 now. So you can see over here VIX is 20.82, it shot up by 15%, so it just had a very big swing. And US 30-year also is now inching towards the 5 mark, which it had reached, and US 10-year is inching towards the 4.5 mark. Which is not a great news. You look at Bitcoin at 105 and USD INR is at 86. Now the two important ones. One is the Brent oil. Now it has touched 75. It was a spike of 7%. Okay, and gold has touched 34, 32. That's almost at an all-time high. So I will take you through. This is the oil chart. You can see the spike over here. It had touched a bottom of 60 in 5th of May. Okay, and look at this in 13th of June. Look at the spike that is there from 69 to 74 in one day, and that is because of the Israel-Iran conflict. Now when such things are happening, you would want a counter to it. With the counter to it is not Bitcoin, the counter to it is not equities, the counter to that is gold. Now look at the gold spot price. It has again touched an all-time high. As soon as oil spiked, equity market started going down, gold spiked, and this is in US dollars. So gold has touched all-time high of 34, 32 USD to an ounce, and that is an all-time high for gold as well. So gold is a must in anyone's portfolio. I've been maintaining that for a very long time, and you need to have counterbalancing things in your portfolio. If you should have a good allocation to equities, because that is the asset class which gives you the maximum returns. Then you should have allocation towards fixed income, which is your debt and your gold. These three are very, very critical, because gold will definitely counterbalance your equities, and it takes care of your geopolitics risk, it takes care of your currency risk, it takes care of your inflation risk. Lot of risks it takes care of. So gold is a must in anyone's portfolio. I've done certain videos also on gold, why it should be there as a part of your portfolio. And if anyone is keen to understand more about how to create your portfolios using mutual funds, please do contact me on the link given below. I help people build their mutual fund portfolios free of cost. I'm a mutual fund distributor, so I help people build a very solid, robust mutual fund portfolio, which takes care of not only the downside, but it helps you build a very solid portfolio which participates on the upside as well. So if anyone is interested, please fill up the Google form and leave your details, and I shall get in touch with you, and then we'll take it from there. If anyone wants to get their mutual fund portfolio evaluated free of cost, they can do that as well, because I've seen a lot of people make their mutual fund portfolios, but they have a lot of errors and gaps in them. So I can do the free evaluation also if anyone is interested, and then if you're keen, you can decide the future course of action. So now coming back to how we are placed for next week. Before that, I will just like to take you through this what has happened on the geopolitics situation right now. So Iran's energy infrastructure situation right now, there is a South Pars gas field which has been stuck, shutting down 12 million cubic meters of gas production, and the Saharan oil field in western Tehran is on fire. Okay, and So this is from Twitter basically. So the more important thing is Iran currently produces 3.3 million barrels of crude oil per day, or 3.5% of global supply. At the current pace, we are set to witness one of the largest one-day increase in oil prices in 20 years. Where do oil prices open on Monday? So this is a handle which highlighted this fact. See, the thing is that if the oil supplies are hit, then oil is going to spike even further. Also, there is a talk of Strait of Hormuz getting closed or coming under effect. Now, a lot of shipping actually happens through Strait of Hormuz. That's in Bandar Abbas port in Iran. Okay, so a lot of shipping happens through that. Now, if that supply is affected, then we can see it can have a domino effect on a lot of other things in terms of freight costs, in terms of crude movement, and so on. That can lead to inflation spikes. That can lead to inflation spikes in US, and in US would mean then no rate cuts, and that will affect the equity market. So there is a correlation between everything that you see that is happening globally. Now, if oil prices spike, then it affects our markets big time, because we are a oil importing nation. So if oil prices go up, then it impacts our growth, it impacts our GDP, etc. But having said that, we will have to see how the oil prices behave on Monday and how this conflict plays out going ahead. If this conflict escalates and we see an immediate impact on shipping, and we see an immediate impact on US in terms of their futures, the interest rates going up, then it's not a good news for us. If this conflict eases down a bit, then the markets will take a breather, and we can see some good movements up. However, some good thing is that Friday we did not fall. Friday, in fact, we went up after that knee-jerk reaction. But again, everything will be dependent on how crude opens up on Monday, and how the markets. Our markets are very, very resilient. Our markets are very good. Our earnings have been good. Our inflation is at an all-time low. So we are in a very good situation. We are perhaps on one of the best situations in the world, if you ask me, in terms of our economy, in terms of the strength, in terms of our macros. So nothing to worry on that count, but it's just that the geopolitics affects everyone globally. So you have to be very, very mindful of things that are happening around the globe and how it might impact your portfolio. So let us see, let us wait for Monday, and then let's take a call. In any case, there is going to be an increase in VIX, that much is for sure. And for option sellers, it's going to be, let's see, like Friday, another good thing that I will tell you is that when the gap down actually happened, the VIX shot up, but whoever came to the market made money. So it is just that if you have the systems in place to come in every day and do the options trade, similar options trade, you will end up making money. If you are just a zero-DTE player, then it's very difficult for you to make money, because zero-DTE, the movements are so wild now that they are not pricing in the options volatility completely. So it was very scary on Friday to come and put the trades, but anyone who had the system to put in the trades would have made good money. So that is where I say, you have to follow your systems, and you have to follow your stop losses and stop profits and so on. So that and show up consistently. So if you do that, and if you have a good system running for you, then you will end up making good money. But if you have a system which is discretionary, in which you are taking trades one day, not taking trades the other day, more reliant on zero-DTE, then it's a tough going. So work on your systems, work on your back testing, be disciplined, have stop losses in place, take them. If your stop losses hit, be happy that you have been saved, and come back another day to trade in the markets. But in investing, it's completely the opposite. You have to stay still, you have to identify for your opportunities. Again, in investing also, you need to have a system in place, identify where the gaps are, see when the markets are going down, how much you want to add when the markets are going down, and then when the markets go up, you get the good results. So it's a highly disciplined game as well, right? So investing and trading both are very, very highly disciplined areas where systems and perseverance and dedication do help. So that's it from me now. If you like my video, please do subscribe to my channel, and please share your comments in the comment sections. Please do let me know if you are interested in the mutual fund portfolio. That link is there, and I shall see you soon with another update, and hope you have a good weekend. Take care. Bye bye.